Hello, everyone. So obviously, currently we had a big move to the upside. We gapped up, and then we had a big move to the downside afterward. So in today's video, another flat sort of day, but we're going to do our best to see what the next steps are for the market. We're going to take a look at the SP 500, the NASDAQ, the Russell, the dollar, the bonds, and the VIX. All right. Should be another quick video. And without further ado, let's get started. Hopefully, we're going to get some sort of damn movement in the market. So let's start off with the dollar. So we know that the dollar has an inverse relationship to the market. If the dollar goes up, then the market should be going down. So we've been monitoring this falling wedge pattern for quite some time. And we know that falling wedges are extremely bullish pattern. So if the dollar ends up being bullish and it starts to rise, then that is bearish for the overall market. We're going to have to see if that plays out. Currently, we bounced off of the 102.50-ish area. I still think we could come back. We should come down to the 102.30 on the dollar. That would be a bit better of an opportunity to bounce. We still have a bit lower to go on the dollar, in my opinion. And that would be, we need to overshoot a bit, in my opinion. So if we overshoot a bit to the downside, that's when people will become much more comfortable to be bearish. And then once more people are comfortable to be bearish, that's the perfect opportunity to bounce it. All right. So I still think we should get a bit lower on the dollar, which in turn is bearish. If we fall a bit lower on the dollar, then that is bullish for the market. All right. In the short term. So let's see how that plays out. All right. So this is a chart of the yields. And we know that the yields also have an inverse relationship to the market. If the yields are bullish, then that is generally bearish for the overall market. So once again, on the yields as well, we've been looking at a falling wedge pattern, and we broke through the first area of the falling wedge. We have another level of support here on the falling wedge, close to 4.15, 4.13-ish area. That would also coincide pretty well with another move lower on the dollar. And from here, that would be a better opportunity for a bounce, in my opinion, on the yields. And right now, we're starting to see it close outside of the lower bands. Of course, that is not an automatic reason to be bullish. But, now we just need to see how the velocity at which we start to fall. So if we really start to capitulate and overshoot, once again, if we overshoot to the downside, that would be a much better opportunity to go long on the overall market, essentially. To go long on the yields and to go short on the overall market. Because once again, we have an inverse relationship. So if the yields are falling, right? If it overshoots to the downside, then that's a good opportunity to go long on the yields. And if the yields are rising, then the market in general should be falling. Okay, so that's what I was basically trying to say. Don't want to get confused. All right. So the VIX now, we could see, is starting to bounce a bit. All right. What's most notable is, number one, how we were looking at the MACD indicator was starting to flip bullish. This orange MACD indicator was starting to move upwards, right? That's number one. Number two is the lower Bollinger Band is sharply rising, which means that there is not much more room to fall lower. Algorithmically speaking, they are ripping the lower Bollinger Bands, which is the lower standard deviation, to the upside. They are basically trying to algorithmically create an environment where there isn't that much more room to the downside on the VIX without it becoming overextended. That is generally very, very bullish for the VIX. And as we know, because it has an inverse relationship, if something is bullish for the VIX, it is bearish for the market. So that is something to really take into consideration here, heading into the end of the year and the beginning of December, in my opinion. So number one, let's go ahead and take a look at the NASDAQ. This is not the most bullish opportunity. Very, very simply put, this is not a really bullish opportunity. We had a gap up and then close lower, below the prior levels of resistance. Also, when you look at the IWM, it's really tough to say that this is a really bullish opportunity. Of course, because we had this wick, as you know, wicks do tend to get a bit more of a bounce. So we could fill this wick a bit, right? But in general, this is still not the most bullish scenario. This is not what bulls want to see, okay? And then last but not least, same concept on the SPY. So once again, this same very important trend line that we've been watching, we opened above it and then gapped up and then we closed lower. So now we're back within that same 456, 452 range. Now, immediately, guys, I would have to say it makes the most sense. Honestly, even going short here and like for it to fall lower, it still feels a bit easy. But the most sense would be if we come to 452 to 450. And that would be the most ideal situation for the market in general if we get a bit of a pullback, because then it makes both sides happy. And that's really cannot really make a clear-cut distinction for the long side in the short term. This is not really, it's not safe for anything. This is not a bullish scenario on any of these indices so far, what we saw. So yeah, it's gonna be a pretty fun end of the week. We have Fed Powell speaking on Friday, so that should be very interesting. But aside from that, we're gonna have to see how everything plays out. But so far, not the most bullish situation. The only thing that stops something like this happening is if we hold this 453.50 level, or if we just gap up. So if we gap up above 456, or if we hold the 453.50 level. Those are the new levels that we basically have to watch. Below that, 452 and 450 are the major levels of support, in my opinion. All right. So, yeah, I hope you guys enjoyed today's video. Once again, please make sure to like, comment, subscribe, do all that good stuff. And I will see you guys bright and early tomorrow morning. Thank you.